had to make this video because it's very important. In trading, you have to put everything that is important together before we can become profitable. If you look at my screen, it says risk to reward ratio, the most important thing that will change your whole trading career. Now there's something here, how to still make profit when you lose more than you win. If I even ask, is that possible for you to make profit when you lose more than you win? Okay, in order to treat that topic very well, I want us to understand the meaning of risk and reward. This is a downward trend line, but on getting to this place, price broke through the trend line, and we're about to take a trade on breakout. So this point is a breakout. After the close of this breakout candle, we'll start looking for entry, and in this case is a buy. This is where we buy. I will put a pending order. Now below here is the stop loss, and above here, which is the previous high, is our take profit. Now the risk is now the distance between the entry, which is the buy, and the stop loss. That is the risk. While the reward is the distance between the entry and the take profit. It is as simple as that. And if I take you to the top of this page, as you can see from this image, we have an entry on this point. This is the entry, and this is the stop loss above the trend line, and here is the take profit, which is the previous low. Now the distance between the entry, which is the sell, and the stop loss is the risk. Why that distance between the sell or entry and the take profit is the reward. It's as simple as that. So before you can be able to determine your risk and your reward, you should be able to identify these three things: stop loss, entry, and take profit. Without identifying these three things, you can't know your risk and your reward. So that takes us to what we're gonna discuss today. And there's something I want to draw your attention to. It says how to still make profit when you lose more than you win. Is that even possible to start with? You lose more than you win and you still make profit. Okay, yes, it's possible, and I'm going to prove it to you in this video. So let's begin. Now here is a definition of what risk to reward ratio means. It says it marks the prospective reward an investor can earn for every dollar they risk on an investment. So risk is that amount you give out to expect a profit. Without risk, there is no reward. So you have to risk before you get the reward. On my screen, I have example of risk to reward ratio of 1:1. Now let me illustrate something to you here. If I'm to extend this way, how many times will this risk go into this reward? That number of times is what we call the ratio. So let's do a rough demonstration here. This could be 1, 2, and 3, while the risk is just 1. So we can say that this trade is a ratio of 1 to 3. As simple as that. Because we have 3 of the risk inside the reward. If we move this take profit down to this place or somewhere here, and we're able to have another box like this one becomes 4. This will no longer be 1 to 3. We're going to adjust this and it's going to be 1 to 4. Now in that same knowledge, if we have our take profit to be here, let's say our take profit is on this level, our risk to reward ratio is going to be 1 to 2. Then again, if our take profit were to be somewhere here, then our risk to reward ratio is going to be 1 to 1. Can you see that? It means the number of pips or points of this risk is equivalent to number of pips and points of the reward. Let's say the risk is 10 pips, then the reward should also be 10 pips. That is 1 to 1. So with this idea, I know you will have a good knowledge about what we mean by risk to reward ratio. So 1 to 1 means that if the loss is 100, the win should be 100 because it's 1 to 1. Okay, this is what it means. Let's say you risk $100 in a trade. When you lose that trade, you are losing the $100. But let's say you win the trade, you're going to win $100. So if you lose 100, if you win 100, that is 1 to 1. Now let's talk about 1 to 2. 1 to 2 means that in this example, this one represents the $300 and these two represent the $600. That is because 1 times 2 will give you 2. So 300 times 2 will give you 600. It's a game of multiplication. There is nothing difficult here. Just a game of multiplication. That is why 1 to 1, you have 100 times 1 gives you 100. 1 to 2, you have 300 times these 2 gives you 600. It's just like that. There's no other way to explain this. If it were to be 1 to 3, that would be 300 times 3. That's going to give you 900. As simple as that. If the ratio were to be 1 to 10, it means $300 times 10. That will give you $3,000. So when you talk about ratio, what we are doing is just multiplication and nothing more than that. So have that at the back of your mind, because you're going to need it as we proceed. Now look at this scenario whereby you take 20 trades, you lose 15 and win 5, and you are still in profit. I don't think you understand what I'm trying to say. Out of 20 trades, maybe you took 20 trades in a week. Out of the 20, you lose 15 and win only 5, and you are still in profit. How possible is that? Okay, we're going to find out that it's very possible, and the reason why it's possible is because of risk to reward ratio. We're going to learn this in details. I got this from my mentor, so I'm going to use that same idea to explain this to you. So let's go ahead. Here it says for you to lose more and win less and still be in profit, you need to take trades that are at least 1 to 3 risk to reward ratio, just as the trade we analyzed above. Just as we analyzed this trade, we got 1, 2, 3. So this kind of trade you should take. If you mark your entry, your stop loss, and your take profit, and you discover that your trade is 1 to 2, please don't take that trade. If you must take that trade, you have to be very careful. So that is that. Always take trades that are at least 1 to 3 risk to reward ratio. Okay, now further explanation of a risk to reward ratio. Now, if your risk to reward ratio is 1 to 3, that means your risk is going to be 100 and your reward is going to be 300. What it means is this, that if you risk $100 and your trade hits stop loss, you're going to lose $100. But when your trade hits take profit, you're going to earn $300 because it's of 1 to 3. So the best way to do that is this multiplied by this 3 give you this. As simple as that. In the same way, if your risk to reward ratio is 1 to 5 and you risk $100, if your trade hits stop loss, you're going to lose $100. But if you hit take profit, you're going to earn $500 because it's ratio of 1 to 5. 100 times 5, that gives you 500. The same way with this, 100 times 7 gives you 700. This is your stop loss and this is your take profit, or this is your risk and this is your reward. Now in the same vein, if your risk to reward ratio is 1 to 30, now somebody might ask, have you ever taken a trade of such a risk to reward ratio? Yes, the touch strategy can give you this. It doesn't happen all the time, but it can give you this. So if your risk becomes 100, for 1 to 30 risk to reward ratio, your reward becomes 100 times 30, which gives you $3,000. So that is what risk to reward ratio is all about. This is the simplest way to explain this. Now let's go further and see. Imagine you lose 70% of your trade on risk to reward ratio of 1 to 1. You might think you're a loser. Now this is what it means. Out of 100% trade, you lose 70. That means you're going to win 30. Now let's see what this table is talking about. Remember, here we have risk to reward ratio of 1 to 1. So if you risk $500 and it's 1 to 1, 500 times this one here, please, it's not the one here, 500 times this one behind here will give you 500. That is straightforward. Okay, now what happens when we go further? Let's say we have a total of 7 and 3 trades, which is 10 altogether. 10 trades. Now you lose 7 and you win just 3. With this risk to reward ratio, kindly pay attention here, because I want to show you why you shouldn't trade risk to reward ratio of 1 to 1 or 1 to 2, but trade at least 1 to 3 and above. That's what I want to explain to you right now, so pay attention. Now when you lose here, remember our loss is $500 when we lose. So let's say you now lose 7 times. So it's going to be 7 times how much you're going to lose, which is 7 times 500. And when you punch that on your calculator, when you say 7 times 500, that will give you 3,500 negative. Remember, is a loss, so that's why we have this negative sign here to show is a loss. Okay, now what if you win? When you win 500. What if you win 3 of those trades? So it's going to be 3 win times 500, and that's going to give us, if you can punch that on a calculator, 500 multiplied by 3, that is 1,500. So if you happen to take 10 trades in a week, you lose 7 and you win 3, you're going to be down with negative $2,000. You're going to be losing $2,000 for that week. And I believe you know the reason. It's simply because of your risk to reward ratio. Because your risk to reward ratio is 1 to 1. So you're going to close that week on a big loss. $2,000 loss. So that is what risk to reward ratio can do for you. Now let's move ahead and check other risk to reward ratio and see how they affect our trade. So I move down here. In this example, we're going to use a risk to reward ratio of 1 to 5. It means my risk is going to be $100 and my reward is going to be $500, because 100 times this 5 behind here is going to give me 500. So with that in mind, let's assume in a week we're going to take 10 trades, and out of these 10 trades I lose 7, and whenever I lose $100. So what's going to happen is that when I lose 7 times, I'm going to multiply 7 by 100, and that is what I have here. And since it's a loss, it's going to be negative, so I'm going to have a negative $700. That is for the loss. And out of the 10 trades, I win just 3. Each time I win, I win $500. Now I have to win 3 times here, so it's gonna be 3 times this $500, and that is what I have here. And when I punch this on my calculator, 3 times $500, that is 1,500. So this is going to be 1,500 win. So now here is the magic. I lost 7 trades, that is negative 700, and I won just 3 trades, and that is positive 1,500. So what I'm going to do now is I'm going to remove this loss from this. 1500 minus 700. So it means that week I'm going to have a profit of $800. Now, this is where it begins to get interesting. It means I'm going home with $800 for that week, despite losing more than my win. Don't get confused at all. This is the reason why we ended the week with the profits, because of this risk to reward ratio. And if I can do this in a week, in a month I should have this, and in a year I should have this. Depends, something very close to these figures. Now we have seen the power of 1 to 5 risk to reward ratio. Let's continue. So it says that if your risk to reward ratio is from 1 to 3 and above, it doesn't matter how many times you lose, as long as you have few wins, your risk to reward ratio will save you. That is it. Your risk to reward ratio is going to save you. It doesn't matter how many losses you have, but once you have few wins, you're going to close that week in profits. Now let's see a risk to reward ratio of 4. Now you know that if a risk to reward ratio of 5 can give us profit at the end of the week, then let's see what this one we do. Now again, we have 6 and 4 trades altogether. 6 plus 4 is going to give us 10. So let's assume in a week we took 10 trades, and each time we lose 300, but each time we win 1-2, because 300 times 4 will give us $1,200. Now I lose 6. Each time I lose 300. So I'm going to multiply this 6 by 300, and that is what we have here. And it's going to give us 1,800 negative because we're losing this. Now, on the other hand, when we win $1,200, and 4 wins, you're going to give us 4 times this, and that is what we have here. 4 times 1,200, and this is the outcome. Again, we're going to find our profit for that week. So 4800 minus 18, that is our loss. For that week, we are closing with $3,000. If you take that for months and for a year, we'll know it will give us an idea of what we stand to gain. Again, this is the reason why I lost 6, won 4, and I'm still in profit. It's because of this risk to reward ratio. So whenever you hear me saying that risk to reward ratio is very important, this is life and direct, showing you how important it is. So let's go ahead. I really need to show you more examples because this is a very, very important stuff. Okay, now for someone who wants to start small, or you risk a little, here is a risk to reward ratio of 1 to 3. It means if you lose, you're losing 5. When you win 5 times 3, which is 15. Same applies to 1 to 4 and 1 to 5. This multiplied by this gives you the win. So look at this risk to reward 1 to 4. Let's look at this before we take a look at this. Here is an example of 15 trades altogether. You lose 10, you win 5. And here is the outcome. So this 100 minus 50, you are $50 rich at the end of the week. Now, if this were to be 5, you will be $75 rich by the end of the week. This is as simple as anything you can think of. Okay, let's proceed. Here it says focus on RRR and you will be a great trader. I don't know about you, but I want to be a great trader, so that's why I'm focusing on this. Now look at this. If after so many years of trading, or when you have mastered a strategy very well and your win ratio increases, normally the great traders in the world, they have about 40 to 60 win rate. And that's why when you go online and someone tells you I have a 95% win rate, you have to be careful. This does not exist in real life. No one can be accurate 95% of the time in forex trading or whatever uh, instrument you're trading. This is not applicable, but you can have 40 to 60 and you still be in profit, as you're seeing with this demonstration I'm showing you. Okay, let's proceed. Now if you flip the coin and we have 7 wins and just 3 losses, that means our win rate increased over our loss. Now what can happen using 1 to 4 risk to reward ratio? It means when our risk is $300 and our reward will be 300 times 4, that is $1,200. Okay, fine. Now what happens when we win 7 times? It means 7 multiplied by this, and this is what we have here. That is $8,400. Now what happens when we lose just 3 times? When we lose $300. So when we lose 3 times, it's gonna be $300 multiplied by 3, and that's what we have here. And since it's a loss, it's gonna be negative, so we have negative 900. Now on carrying out a simple subtraction, this win minus this loss, we are left with 7,500 profit for that week. And if we multiply it by 4 for the month and 12 for the year, so that is that about increasing our win rate so that we win 7 times and we lose just 3 times. Now I hope I've been able to explain this. Now let's move over to the chat and see a live demonstration of what we're discussing. So this is 75 1s, and looking at what we have on the screen, this is our trigger candle. At the close of this doji, we should be looking to buy, and our stop loss should be few pips below the trend line. And do you know where our take profit would be? For take profit, we are going to target this previous high or this previous high, or this or this, just depends. So for this I'm going to target this one, then target this, and also target this previous high. So let me enlarge the chart now. So this is going to be my buy, my entry, and this is going to be my stop loss. And here is the first take profit. Now we're going to check how many times, what is the ratio of our first take profit to our risk. We can simply use the crosshair to give us a little idea. So this is just a rough calculation. We have 10,000 points. So let's check between our entry and our TP1. We have 21,000 points. So 21,000 or 20,000, if you want to approximate, 20,000 divided by 10,000. That is a risk to reward ratio of, okay, let me spell it out. 20,000 divided by 10,000. That will give us a risk to reward ratio of 1 to 2. Okay, now let's take the next TP. Let's check the next TP. So I use a crosshair again. This is over 30,000 points. So this is 30k. And when you do this math, we have a risk to reward ratio of 1 to 3. Now this is our last TP. Let's check that as well. So I use the crosshair. Oh, sorry about that. I use the crosshair from my buy to my last take profit, and this is over 60,000 points. So you're going to divide. This is the simplest way to solve this issue, and when you do that, you're going to have a risk to reward ratio of 1 to 6. So this is how to do this on a live chat, and I believe with these explanations you should be able to sort this out yourself without any problem. Now let's take a look at Forex. For example, we have a GU here. Let's see what's going on GU. And remember our touch strategy. Touch strategy is one of the easiest to identify. Whenever you look at a chart, you will see the strategy there looking at you. So right now, I believe you've seen the strategy. So let's look at our entry. So I want to increase this chart because I want to see this candlestick very well. So I want to increase it. So let's locate our entry and our stop loss. Now this is supposed to be my trigger candle. It's supposed to be my trigger candle, but this trigger candle is becoming so long. Look at the length of that candle. So In this kind of situation, you're going to use experience to trade this. When this candle closed here above, the next one opened here, went up. As an experienced trader, your entry should be aggressive within this region. If you can't take aggressive entry, then you're expected to leave that trade, or what's come to us, as soon as this bearish candlestick comes below the body of the green candlestick, you should start looking for your entry. So this can be your entry or aggressive somewhere here. So let's use this as our entry and our stop loss here. The reason why I said that is this. This is the highest point this candlestick traveled, and this one could not go beyond the previous candlestick. Remember, this business or trading is all about taking your risk. So sometimes you see the candlestick, you see the formation, you are bound to take some risk even if you don't know the outcome, but take the risk and wait for the outcome. After all, it's all about risk taking. So looking at this on a 1 hour chart, this could be my entry, and my take profit level should be my previous low, and in that case this is the previous low. This is my previous low. This is my stop loss. Stop loss, entry, and take profits. Now let's check for the risk to reward ratio in this trade. So I pick the crosshair from my stop loss to entry, or from entry to stop loss, whichever one. So I have approximately 150 points, or let's just make it 100. Then from my entry to my take profit level, I have 700. So this is what it means. Here is about 100 points, and here is 700. So when you divide 700 by 100, you're going to have a risk to reward ratio of 1 to 7. As simple as that. This is on currency pair. Now let's see if we can spot another good trade. This is a GJ. Do we have a good trend line here? Yes. Now notice something I did right now. I'm on 4 hours. Now notice how I manipulated this chart just right now. When I opened this chart, it was on 1 hour. And on 1 hour, the chart were looking a bit I was seeing a bit noise. So I have the option to change my time frame. And you see the chart is looking cleaner right now. So this is part of your job as a trader. You have to switch between time frame to get the best. out of whatever instrument you're trading. Okay, so I'm back to 1 hour, and where is going to be our trigger candle here? Is it this? This is supposed to be our trigger candle because this was our first doji, which signifies a reversal. After the doji comes this bearish candlestick. So this is what I'm going to I'll do here. The close of this doji and the top of it is going to be my entry and stop loss. And my take profit level is going to be way down here because of the previous low, and that is what I have here. So let's check for the risk to reward ratio on this trade. So I pick my crosshair. Remember, you have this crosshair on your mobile as well. Here I have above 300 points. So I do the other one. And here I have 1170 points. So 1170 over 300 points. Then don't forget, you can also use your calculator for this. When you use your calculator, it gives you the actual numbers. Here I have 323. And as my risk, then as my reward, I have 1170. So what I simply do is this: 1170 divide by 323 if I want to be specific. So that gives me 3 points. So it means that I have a risk to reward ratio of 1 to whatever you have here before the decimal point. So this is risk to reward ratio of 1 to 3. So I will be able to take this trade because it meets the requirement. I wish I can take an example on crypto. Let's see. Wow. Okay, I was looking at this before I started making the. Well, let's look at it together. So here we have a doji here, and the doji signifies our trigger candle. If you know the doji strategy very well, you should understand what we're doing. So this is my entry and my stop loss, and my take profit should be a previous low. And from what I can see here, this should be my previous low. Also, I have a previous low here. So let me try and see how I can use. Okay, so this and this could be TP1 and this could be TP2, but for this I'm going to use just the TP1. So let's find our risk to reward ratio. I take my crosshair. Now another method of looking for a risk to reward ratio is to be specific, as in to be specific. We don't want to approximate. So after imputing the horizontal line, I double click on the line, I get the value, I copy it, I paste it on the calculator. Then I do the same thing for the entry. I take the value and I say subtract or whichever way. I can easily type it in like this. I will say I'll put this figure 5. There's a minus already. 5 0 4 4 0 dot 5 6 2. So what I'm looking for is the difference between these two numbers. So let me use my crosshair to still check. So I have about this is huge because we're on a daily time frame. Now it will not be advisable to enter a trade on a daily time frame except you have a big equity or balance. But let's just continue since you have started with this. So the calculator gave me some figures like 2000 something point, and let me try and tally that with the crosshair. And you can see the crosshair also gave a similar number. That is a 2 million point. That is 2 million points. Remember, what we're looking for is a risk to reward ratio. We must not be dead accurate. So I got 2 million from the risk. Now the reward, what is the reward giving me? Let's check the point. The reward is giving me 8 million. So when you divide 8 by 2, 8 divided by 2, that is 4. So what simply means is that this trade gave us a risk to reward ratio of 1 to 4. As simple as that. Okay, before now I said this on a daily time frame. We could always go down to smaller time frame to enter such a trade. So let's head down to 4 hours. And this is 4 hours. We have a shooting star. Okay, and we have this long rejection. Let's go to 4 hours as well and see what we have there. 1 hour, sorry. And here is the 1 hour reversal here. I think what we have here is a bearish harami. That's a bearish harami and is a reversal candlestick pattern. And also when you spot this on an area of value such as a trend line, support and resistance, you should know that this is time for the market to change direction. Okay, another thing is if you don't want to make use of that, you can also make use of this breakout using the breakout strategy. Alright, so we moved from volatility index to forex, from forex to crypto, showing you how important or how to check your risk to reward ratio before you embark on any trade. I hope I've been able to do justice to this topic to the best way anyone can understand. That'll be all for today. I'll see you on the next one.